Welcome to Inventive Minds Child, Youth, and Family Support Center. We are a not-for-profit organization working with families in their day-to-day parenting by providing workshops and seminars related to pediatric and child development. Inventive Minds provides care in the early years sectors for newborn to age 6, licensed under the Ministry of Education all across Ontario. Inventive Minds cares an elementary school open to international students from junior kindergarten to grade 3. The Inventive Minds Family Center helps families in mediation, arbitration, and parent coordination cases related to family separation and divorce. We support families during and past separation and divorce. Inventive Minds works with court orders to conduct child voice report and parenting courses related to CAS, court, and mediation purposes. To learn more about our services, reach us at inventivekids.com. My name is Rose, the founder of Inventive Minds Family Center. Today we have with us John. I'm very excited to have him with us. We're going to talk about mortgages, going through separation and divorce. Hi, John. How are you?
Good. How are you? Thanks for having me.
Thank you. So if you could give us a little bit about yourself and how can people reach out to you?
So I'm John Panagakos. I'm a mortgage agent in Ontario. I created a service called Separation Mortgages about 10 or 12 years ago, and it deals with everything separation and divorce as it relates to mortgages. If people want to get in contact with me, look us up on Instagram, Separation Mortgages, or separationmortgages.com. Reach out anytime. Happy to have a conversation with just about anyone that has questions or comments.
Thank you so much. I know that's a huge topic when people are going through separation and divorce. That's a very emotional time for families, and finances is a huge part of discussion when it comes to separation and divorce. Knowing that, would you give us a brief review of what is the job of a mortgage broker and a bank? What are the differences, and why do you recommend a broker over a bank?
It's probably one of the number one questions that we get. And there's nothing wrong with the bank, right? I'm not here to poo-poo on any financial institution because we simply work with all of them. But let's say you walk into a bank and you say, "Hi, my name is Mrs. Smith, and I'm in the process of a separation. Can you pre-approve me for mortgage financing?" The answer is going to be no, because you don't have a signed separation agreement. A good mortgage broker, and there's very few mortgage brokers that understand separation mortgages very well, but a knowledgeable mortgage broker in this space can not only offer you a pre-approval, but can offer you an approval without a signed separation agreement to give you the information that you need in order to confidently sign your separation agreement. For example, Mrs. Smith comes up to me and she says, "I don't have a signed separation agreement. Can you get me approved because I want to keep the matrimonial home?" Or, "I'm being bought out of the matrimonial home. I will be given approximately $200,000 as an example, and I'd like to purchase in my neighborhood. Can you do that for me?" A knowledgeable broker or my services, we can shop the market for you. So when you go directly to one bank, you have one option, and they're probably going to say no. With us, you have many different options, including the bank that said no to you, because we know bank policy better than most, and we're able to tell our friendly underwriters at all the banks what is going on, and they're able to help people. So that's the problem that we solve.
That's a very good example. And I can personally relate to this myself in many different levels. As a regular person who wants to purchase a property, even though you're not going through separation divorce, it's much better going through a broker than it is going through the bank itself, because they really help you and support you of how to present your files. Can you explain to me what happens to a mortgage when you divorce in Canada?
The answer is it sort of depends, because there's many different layers to that question. Let's assume that you are in the process of separation and divorce. Maybe you don't have a signed separation agreement, but maybe your renewal is coming up. What do? Both people need to agree on signing the renewal form. We often suggest maybe you get a 1-year fixed. Maybe you get a fully open. It really just sort of depends. You don't want to get a 5-year fixed. I can tell you that right off the hop, because there's going to be a penalty associated with your mortgage when you break your mortgage. And it's going to negatively affect you, and it's going to negatively affect your ex. And I respect that you and your ex may not be getting along, but you still need to also make sure that you are not in financial peril once you, we'll call it, refinance or sell the matrimonial home. So we need to make sure that we mortgage plan effectively so that everybody benefits. So if you get the right mortgage, and other times it's, hey, I'm going to keep the house. Mrs. Smith is going to keep the matrimonial home. Their mortgage is not up for renewal. They're just going to break the mortgage or there'll be a penalty. And Mrs. Smith may add $50, $100, $200, $500,000 to the existing mortgage to buy out her ex. More than likely, she will get a new mortgage for a higher amount of money, or he will get a mortgage for a higher amount of money. And we deal with that each and every day. And we just explain to them what the process is based on their unique circumstances and the path to a solution and what obstacles they will need to overcome with our help. There's always going to be obstacles, and it's better to have a mortgage broker holding your hand versus you doing this all by yourself.
Thank you for that. Can you explain how a mortgage is divided in a divorce?
I will also preface it by saying this is not independent legal advice. I'm not a lawyer, but normally what happens, let's assume you sold a house for $1 million, and let's also assume that there's a $500,000 mortgage on the property. Easy math, $1 million sale, $500,000 mortgage. Each person will get about $250,000. But within that, there might be other negotiations. He might owe her more funds for insert reason. Traditionally, it's the sale of the property less the mortgage and any existing debts that exist, divide by 2. That is the simple math. And it gets a little bit more complicated with your mediator or your lawyer or whoever if there are other issues at play. Maybe someone owes someone some spousal or child support back payments, and they want to pay them through the equity of the property. But that's generally how it works.
And again, that's where the family mediator comes in when they're doing asset evaluation and equalization. Those are the things that they take in factors. So it's really important to have a whole financial disclosure available so they can help you through the process with the mediation as well. My next question to you would be, can one spouse take over a mortgage in a divorce, and how does that work?
So the simple answer is yes, as long as they can qualify. So let's say you have a mortgage of $500,000. Let's also assume that somebody is keeping the house and there's no buyout to the ex-spouse. All that person needs to do is qualify for that $500,000 mortgage in order to take it over. There's a bunch of paperwork and math that goes into that. And this is why we strongly suggest that you use a knowledgeable mortgage broker in this field and how that broker can position your file for success. Other times, this is the most traditional way of that this happens is the matrimonial home is evaluated at, say, $1 million. There's a $500,000 mortgage on the property, and then there's a buyout to the ex for $250,000. So the person that's keeping the property needs to make sure that he or she qualifies for a $750,000 mortgage, $500,000 existing mortgage plus a $250,000 mortgage, a buyout. Put that together, that's $750,000. Can that one income satisfy the bank's lending guidelines and policies to qualify for a $750,000? Maybe, maybe not. And in most cases, there's child and spousal support. So we're able to use 100% of child and spousal support in most cases for the person or anyone that wants to keep the matrimonial home or that's buying another property. Every divorce and separation is very unique. No two are the same, and that there's different factors at play in order to qualify for a mortgage. So we know these processes very, very well. We do about 16 to 20 separations and divorces each and every week, and we certainly have a ton of experience to help clients and mutual clients and make sure that they're successful in what their end goal is.
I guess the next question is how to get my spouse off the mortgage in separation.
You'll need some sort of agreement. More than likely, it's going to be a separation agreement that needs to be completed. At some point, it needs to be signed with independent legal advice. That's very important. Assume that Mrs. Smith is going to keep it and she wants to get her ex-husband off. We will take that signed separation agreement. We will present it to the bank. And within that signed separation agreement, it'll tell the bank and the broker exactly what needs to happen. At that point, the bank will either say yes or no. They will more than likely agree and provide you with an approval. And then your real estate lawyer is then what we call instructed. The real estate lawyer is provided with documents that simply say, Mrs. Smith is going to keep the matrimonial home and Mr. Smith is going to be removed from the matrimonial home. And so both Mr. and Mrs. Smith need to make an appointment with the real estate lawyer. Sometimes there's one real estate lawyer, sometimes there's two. It really just depends on on the comfort level of the real estate lawyer and the relationship between the exes. Sometimes it's friendly and amicable, and other times it's contentious. The friendlier each person is, more than likely they'll be able to use one real estate lawyer, and which also reduces costs. The real estate lawyer will simply say, I will give you your buyout, a check for, say, $250,000, as long as you sign this document that says that you release your interest in the matrimonial. You've signed a separation agreement. Essentially, it's the exact same thing. So Mr. Smith will get his money and Mrs. Smith will get her title. Essentially how it works. That's generally speaking the process of how to keep or take over the home.
That's very informative. Thank you for all that insight information.
We're very fortunate that we have a lot of people that refer us, and we have people just like you who interview us and do podcasts together. We certainly are very blessed that we know a lot of this, and we are happy to share information.
Thank you so much for that. When should I contact a mortgage broker or my family mediator for mortgage and asset separation?
You can talk to your mediator whenever. You want to talk to your mortgage broker as soon as possible. There might be things that need to be addressed. Is there good credit? Is there bad credit? Can you afford the property? Like, listen, you're going through a separation. There may or may not be child support. You want to keep the matrimonial home. The numbers may not make sense. You may need a co-signer. That may or may not work. And so there's many different questions that we will ask that need to be answered in order for someone to get their ultimate goal. Sometimes both people need to sell the house and maybe they'll be renting. Maybe both people will be buying. But it's important that you get all the information up front. And this also helps the mediator move forward with how they want to structure the mediation process.
Basically, some of these decisions, it's better that they reach out to a mortgage broker and have a plan in mind before even meeting their family mediator, because once they're meeting their mediator, they're able to come up with a resolution together as a couple.
Oh yeah, we get calls from mediators all the time. I have a couple clients. This is what they want. These are what the numbers are going to look like or thereabouts. Can they qualify? And so we will help the mediator say yes or no, or this is how the numbers should look like because the bank prefers them this way. Not only do we have client discussions, but we also have discussions with mediators. And sometimes we have conference calls with both separating clients and the mediator to make sure that everyone is on the same page. So we structure our service accordingly. So sometimes people just want one-on-one. Sometimes they're like, I want you to talk to my mediator also. Sometimes people are like, you know what? My ex and I are very amicable. We're open to conversation and we really want to make this work. Can you have a conference call? We're like, absolutely. Let's figure this out and make sure that everybody has the best information at their fingertips in order to be successful.
What are some recommendations for people to ensure to have on their separation agreement?
One thing that is really important to have within the separation agreement, especially if both people are selling, we'll call it the matrimonial home. Sometimes both people need bridge financing. And it's important that both separating people, Mrs. Smith and Mr. Smith, need to sign each other's bridge approval document. And sometimes Mr. Smith is like, I don't want to sign your bridge document. And I don't care if this is going to cause you heartache or anxiety. But if they both agree and it's in the separation agreement, then great. So that's one thing that we recommend to mediators and others to be conscious of. Other thing, are you going to be receiving child or spousal support? Does the child and spousal support have an end date? And if it does, we need to be conscious of that. If the kid or the child is, say, 18, someone needs the child support in order to qualify for a mortgage. A couple of tidbits are 18-year-old son, Jerry, he's 18. He was just accepted to Western University where he's going to be doing an undergraduate degree for 4 years, likely a postgrad for another 2. So the child support will continue post 18 years old. Certain pieces of information like that, it helps the bank be a little bit more confident in approving a file.
So really, when they're doing their separation agreement, anything to do with finances, they want to really have it down on their agreement, how long the term would be and the amount. That's just going to really help with their mortgage and the numbers that you're going to be supporting them when it comes to property and the mortgage that they're supposed to get. It looks like it's considered as part of their asset, the income.
Exactly. Like imagine if you're going to be receiving child and spousal support. Let's also assume that the kids are, say, 14. Let's say in black and white, it says child and spousal support is going to end in 4 years, 5 years, whatever. The bank may not want to approve that file. If someone wants a 5-year fixed and child and spousal support end in 2 years, they're not going to want to approve a 5-year fixed mortgage. They may just want to approve a 1 or a 2 year. The good news is once you have the mortgage with that specific lending institution, as long as you pay your mortgage on time, they're going to renew you after the first year and after the second. It really just depends on how you structure everything and how everything is laid out. We've seen other separation agreements where there's a tiered spousal support. Year 1, Mrs. Smith is receiving $10,000 a month. Year 2, she's receiving, say, $20,000 a month. Year 3, 30, 40, 50, right? It's sort of tiered. The bank is going to use the lesser of the 5 years. They're not going to use the $50,000, and they won't even use the average of the 5. So it really becomes a situation where you have to know which bank to approach in order to be successful. Do we use a chartered A bank? Maybe we use a credit union. Every bank has a very different lending policy and guideline, and they're not all built the same. So some banks I call divorce friendly, and other banks I call not so much divorce friendly. We like to use the ones that are friendlier to our clients in order to assure that they're the most successful based on their unique circumstances and based on the unique circumstances or the unique details of their separation agreement.
I have a quick question. Does RSP becomes part of assets for mortgage or no?
Not really. So there's 2 answers to that. Let's say there's an RSP rollover that is not turned into a LIRA. A LIRA is a locked-in investment, which means you can't access it until you're like 65 or the age of retirement. If it is a rollover from person A to person B and it's locked in, it is not considered an asset. If, however, it's rolled over from person A to person B and the person can access the funds, you can use 70% of the value of the RRSP as what we call net worth. Because sometimes banks like to make sure that they have a fallback plan in the event that something happens. They don't necessarily need to cash the investment. They just need to show that they have it. And they can show that they have it with the signed separation agreement because it'll clearly state within the signed separation agreement that person A is transferring person B wealth. And we say they can only use 70% of that is because if anyone was to cash in an RRSP, that the government, the CRA, will take a 30% withholding tax right off the top. That's why we use 70%. What happened 10 years ago is very different than what lending is today. And what lending is today is going to be very different in 5 and 10 years from now. The only constant is change. So we always need to adapt and sharpen our pencils to make sure that we stay relevant and make sure that our clients and mediators and other people are very in tune with what's going on.
Thank you. That's very informative. Is there anything you want to leave behind as a word of wisdom for anyone who's listening today?
Firstly, thank you for having me again. This is wonderful. Our best advice to everybody is take a deep breath and take a step back. Whoever your team is, just make sure you have great confidence in that person and trust your gut. Your gut is a really good instinct. It's a strong instinct and will tell you, yes, this person is for me, or no, this person is not for me. But the other thing is, you may have a friend or someone of influence in your life. That person may have had other friends who have been separated or divorced. It's really important to understand that the divorce process is different for you and is different for your girlfriend or your colleague or whoever. What happened to them is different to what's going to happen to you. If one bank says, no, you're not going to qualify because of reasons A, B, C, then that's just one opinion. The good news with us is we have several opinions that we can approach. So we don't need to make an appointment to 7 different banks to get 7 different answers. We do everything on our computers and we have access to every single bank. Whereas a client who wants to do this all on their own needs to make an appointment at the Green Bank, wait several hours, find so on and so forth to get an answer. And they might not even get an answer. And then if they don't get the answer that they want, then they have to make another appointment at the Red Bank or the Blue Bank or the Purple Bank. So it becomes really annoying. And your time is also worth something. So if you get a knowledgeable mortgage broker, they're going to take away a lot of the anxiety and stress of the process.
So John, I'm letting you know I'm coming to you for my mortgage next.
Sure. I'm happy to do it.
Right? I look forward to that. Thank you so much. This was very informative. And so again, John, please pass your website, Instagram account for people to reach out as they listen to this podcast.
So Separation Mortgages is the Instagram and separationmortgages.com is the website, and reach out anytime. Happy to have a conversation.
Thank you so much, John. Have a good day.
Thank you so much for joining us today. You can reach out to Rose with her email address, inventivkids with a Z @gmail.com. Of course, I want to thank you all for joining this Inventive Minds Child, Youth, and Family Support Center workshop. Visit www.inventivekids.com to learn about the many other workshops that Rose was just going through with all of you. You can check out a replay of this and many of our other podcasts by searching Inventive Kids, again with a Z, on YouTube, and the Parent Toolbox on Spotify. And join the Parent Toolbox Facebook community group today by searching the Parent Toolbox on Facebook. And thank you, Rose, very much. Thank you all for being here. And I'm sure we'll see you all again for another workshop very soon.
Very soon. Thank you.